your job can feel like the rug has been pulled from right under you. One minute, you're in a regular work routine, and the next, you're facing uncertainty about how to pay your bills, cover your expenses, and keep your life on track. If you've just been laid off, I want you to know 2 things. You are not alone, and that there is a clear set of steps you can take to protect yourself financially during this transition. In the next few minutes, I'm gonna walk you through exactly what to do step by step. Hi, I am Sally, a licensed financial advisor. Let's get started. The first thing to do is to breathe. Layoffs can be an emotional shock, and it's natural to feel fear, frustration, or even anger. Give yourself permission to process, but resist the urge to make big financial moves immediately. Instead, start by reviewing any exit packages your employer has offered. This includes your severance pay, whether it's a lump sum or spread over time, your benefit coverage, and any payout for unused vacation days. Importantly, do not feel pressured to sign anything on the spot. In most cases, you're entitled to take time to review the paperwork. Consider consulting an employment lawyer or your local employment standards office to ensure you understand your rights and, if possible, negotiate for better terms. Once you've reviewed your exit package, move quickly to apply for employment insurance, or EI. In Canada, you will need your record of employment from your employer, and you can apply even before your severance is fully paid out. Processing can take several weeks, so the sooner you apply, the sooner that financial lifeline will begin. Many people wait too long, thinking that they can't apply until their severance runs out, but that's not always the case. Check the rules in your area and apply right away. Next, you need to get a clear picture of your immediate cash flow. Think of your finances like a battery. Every expense drains it, and your goal is to make it last until you can plug into your next income source. Start by listing everything you have coming in, your severance, your EI, and any other income, and everything that is going out, like rent or mortgage payments, utility, groceries, transportations, and debt payments. Separate your spending into essentials and non-essentials. Essentials are the things that you must keep paying for, like housing, food, and minimum debt payments. Non-essentials, such as subscriptions, dining out, and extra purchases, are where you can cut back to stretch your funds. The tighter you make your budget now, the longer your battery will last. If you have debt, it's important to manage it proactively. Always aim to make at least your minimum payments to protect your credit score. If you see that's going to be difficult, contact your lender before you miss a payment. You may qualify for a hardship program, reduced interest rates, or temporary payment deferrals. These options are far more available if you reach out early rather than after falling behind. At the same time, avoid taking on new high-interest debt unless it's absolutely necessary. It can become a heavy burden to carry once you're back on your feet. Another area to review is your health and insurance coverage. If your benefits is through work are ending, ask whether you can extend that on your own expense. This might be a short-term solution until you find new employment. If you had a life or disability insurance through your employer, find out if they can be converted into an individual policy. This ensures that you don't lose coverage altogether. For retirement accounts such as a pension or group RSP, check the rules on transferring them to a locked-in account or a personal RRSP. Avoid cashing them out unless it's absolutely necessary. Doing so can actually trigger taxes and set you back long-term. Some of you have been saving consistently or are close to the planned retirement age, and a layoff can prompt the question, should I just retire now? While it may be tempting to view this as a natural transition point, the decision needs to be made with careful planning. This is where speaking with a financial advisor becomes crucial. They can run projections based on your savings, your investments, your expected government benefits, and the lifestyle goals to determine whether you have enough to maintain the retirement you envision without risking running out of money. An advisor can also discuss phased retirement or part-time work options that could bridge the gap between now and full retirement, allowing you to ease into this new stage without unnecessary financial stress. Finally, don't overlook your mindset. A layoff can feel deeply personal, but remember, this was just a business decision, not a reflection of your worth or ability. Structure your days so you have a sense of purpose. Set aside time for job searching. Learn and rest. Stay connected with your friends and family, and lean on your support network when you need encouragement. One chapter, not the whole story. Being laid off can turn your world upside down overnight, but it doesn't have to define your future. By securing the benefits you're entitled to, protecting your cash flow, evaluating all your options, including early retirement, and positioning yourself for your next opportunity, you can navigate this transition with resilience. Take it one step at a time. Keep your focus forward. And remember, this is just one chapter in your story, and the next one might be your best. If you have questions or want help reviewing your plan, feel free to reach out for a free consultation. Details are in the description box below. We are on a journey to building a community of money smart individuals. Like, share, and subscribe. We'll see you next time.